Hey guys, Jason Whaling here again, and I wanted to shoot this quick video about how to set up a stock chart and read a stock chart, because there's a lot out there, there's a lot of different metrics, there's a lot of different tools, and I wanted to kind of show you how simple it really is to effectively read a chart for whatever kind of investing or trading that you're doing. So I'm over here at yahoo.com, and I'm using a very basic tool to show you that you really don't need something with all the bells and whistles to get the information that you want. So before I dive into kind of which indicators I use and what time frame I like using, I'm just going to go over here and click on the indicators. And there's two types of indicators, really. There's indicators that you want to be looking at. There's indicators that are analyzing the price movement of the stock, so kind of like simple moving average, exponential moving average. And then you have indicators that are looking at volume. And in a little bit, I'll add volume to, I'll blow this up a little bit so we can see the trading volume. I might have to switch stocks to kind of show you how volume plays, but essentially you're just, the stock chart, when you set up your chart, you want at least two indicators from both if you're simply just looking at price action, because you want to know where the volume is and you want to know where the price is, because right now Google's trading at $659.94. Without a historic backdrop, we don't know if that's high, we don't know if that's low, and then after we know whether it's high or low, using something like a moving average or the moving average convergence divergence, or exponential moving average, or a hybrid like a Boiler bands or relative strength, where we want to know, hey, in the context of past prices, is this high or low? And then we want to know if there's a lot going on with the stock, because something can be high, some stocks are high, and because they're high, no one's looking at it. Then there's stocks that are high and everyone is looking at it, and you want to know that. And we know how many eyeballs are on the stock by looking at metrics that look at volume and take into account the trading volume of the stock. Because if Google jumps to $700 a share and trading volume is at an all-time low, well, then it's probably not going to be moving anytime soon. People are okay with it being, 700. And if, on the other hand, Google jumps to 700 and we see volume has just skyrocketed, well, we know a lot of eyeballs are looking at it, and that's going to change how we analyze the chart. Because the more eyeballs that are looking at it, the more volatile the stock is going to be. After all, I mean, stocks go up and down because humans are pushing buy and sell buttons. So we want to know how many humans are looking at the chart, pushing those buy and sell buttons. Because if we have Google at 700, nobody's looking at it, then it's probably going to stay around there because no one's looking to buy and sell. If Google's at 700 and it recently got to 700 and there's a tremendous amount of volume, then we know that Google's probably not done moving yet, because there's still a lot of people clicking buy and sell orders. When we look at historic indicators that give us historic price action, then we can kind of figure out, hey, is it going to keep going or is it done? So the two indicators I like to use is the simple moving average and the MACD, the moving average convergence divergence, because one tells me where the stock price has kind of gone, and then another one tells me, hey, is this move, wherever the stock has moved, whether it's up or down, is volume supporting the move going up or the move going down? You can choose different indicators. There's lots out. There's more than just this short list. I'm just using Yahoo to keep it simple, and you do want to keep it simple. You really only want one. You either want one from each camp, or you want two in each camp. So I'm going to do one in each camp. One that looks at price, one that looks at volume. So I'm going to click simple moving average. I'll just use 50-day and moving average convergence divergence. I'll use their default settings. I actually like to change this to 8, and we'll make this medium so we can see it. Medium, and then slow period, and then medium. Okay. Scroll down a little bit. And then I like looking at, because I don't like day trading, So I like looking at 3-month and 6-month charts. So we'll go to 3-month because it's going to help us a little bit. Ooh, scroll down here. And okay, so now we've got the chart. We've got our moving average, convergence, divergence down here that's kind of looking at our volume and telling us what's going on. And then we have this red line, which is the simple moving average over 50 days. This actually turned out to be a great example because, as we can see, the price moved about a month ago. The price has moved past the simple moving average and is at some very highs compared to the past 50 days. Now I'm looking at the 3-month chart. You can look at a 6-month chart as well. I like 3 months because it's long enough to kind of smooth out any little spikes, and it's short enough to give me shorter term trends that I can trade and invest on. So looking at this, when we're analyzing, we want to say we know that the price is high. Now we want to see, is the price still moving or has it kind of evened out? You know, in my example earlier, I said if it hits 700 and there's little volume, then it's probably okay. It's probably to level out. And this chart shows exactly that. We can see that the price kind of moved up, and these little bars at the bottom here are the green and red bars are volume. As you can see, soon after the price passed the moving average, volume started to rise. Now, volume didn't rise too much until July 15th, which is actually 8 days after we saw the initial, or 5 days after we saw the initial little jump. Now, this can get confusing, so I'm gonna go as slow as I can here. With this particular chart, we're seeing that this spike in volume on the 17th, if we had seen this, well, you would have steered clear of this stock. If you were an investor, if you were a trader, you're probably going nuts and going, yay, it might go higher. But you see the next day, it didn't go higher. And using the volume is how we know what this is going to behave like. Because up until this point, up until it crossed the line, volume was really low. Volume was flat. Volume didn't tell you anything. It kind of looks the same each day. We don't really know what the price is doing based on volume. And that's why we have two metrics. So our other metric, the simple moving average, was showing us the price is bumping up against the line constantly. You can see this here, 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 here. Those bumps, every time it hits, that support, that ceiling gets weaker. And so it kept hitting. It had a little jump. It had a little jump, but we look down at the volume wasn't that much different. So we wouldn't have done anything. And we have and it goes back down, and we can see on the way down, volume upticked a little bit because people got nervous. People get nervous when it hits a resistance, which is what this line was until this point. Now, you can see down here, there is a little uptick in volume right after it goes. And those are the people that say, you know what? I think this guy's gonna jump. So I'm gonna get in early. So these are the early bird speculators. Those are who are on the chart right here where we're looking at right now. Then we have the late bloomers. These are the guys who are sitting back and waiting for all the early birds to finish their buying. And I'm going through each part of this because I want you to see that charting is reading a story. We're reading a story right now. So we saw where the early birds got in. We saw where the semi-early birds got in. They wait for the early birds to flock. If back here, the early birds got in and then just got hammered. And the late bloomers were just waiting around. Here, the late bloomers see, hey, you know what? It looks like the price is actually going to stay up. We're going to go up a little bit. And a couple days later, everybody else catches on, and this price goes up and volume goes through the roof. And if we take a look at our moving average convergence divergence, what we're looking at down here, I'll just say MACD. It's a mouthful, right? Stick with me now. We're almost done. As we look down here, we can see that we're looking for the blue line to cross above the yellow to signal to buy. And that's why we like using both of these. So we got an early signal to buy here, and then we got a solid signal to buy here, right after the late bloomers. So the best way to do this when you're investing is you want to wait for the early birds, and then you wait for the late bloomers, and then you get in right before this giant spike. I'm not going to pretend like that's easy and you're going to do it every time, because this is actually, hindsight's always 20/20, right? It's really easy to see this kind of thing in hindsight. But I just want to show you the story. Each stock goes through this story. We've got the early birds, we've got the little late bloomers, and then we have everyone else. And then you can kind of see volume goes, everyone gets in, they get overexcited, and we see a little dip, which is normal when it tops out. We see a little dip, and then it dips back down, and it's kind of got this. We could probably, actually, let's do this. I'm going to do this, so we can draw a line here to kind of show you what I'm talking about, and it kind of creates a new. Once it bottoms out, it creates a new support. And we can see this is a new support. So we're going to say now we're kind of in this. We've gone through all of the hubbubaloo of it jumping up. We're seeing the volume spike. Now these volume bars here are very similar to the volume bars over here. And so this is why looking at, and we can do the same thing down here with the MACD. We're looking at these two periods and saying, hey, volume is back to normal. So this is probably where the stock is going to stay for a while. And this indicator, the red line, the simple moving average, it's going to take a while to get back up to reflect the current new prices. And so as we, here we go. And so as we're looking at, if we were looking at investing in Google, we would know that, hey, the fun ride is over. This is it. That was the spike. And now we're going to essentially a new trend. We're at a new ranging trend. So it's just going to bounce around up here, just like it bounced around over here. And when we see a pattern like this again, sorry, this is a lot of writing, but I really want to end this point. We now know what the pattern looks like of volume and what the MACD looks like when we're going to see an uptick. So when you start to see this again in the future, it's a really good indicator that a large spike might be coming. But if you had only used, let's take 1 second. All right, there we go. Just wanted to clear that out. It's getting a little hectic. So if we'd only used the price, if we'd only used a price metric, we would have gotten a false signal here, and we probably would have gotten false signals along here when it was hitting the line. But because we were using the price and a metric that looks at volume, we weren't tricked by these little bumps like some of these other people inevitably were, especially the guys who bought in right here thinking that the spike was going to happen here. It didn't happen until the moving average and it didn't happen until the MACD and the moving average both indicated that things were ready to change. So that's a quick summary of how to kind of set up a chart, how to read a chart like a story. Definitely don't worry if this didn't make sense. This was kind of just a quick video I wanted to shoot. It was on my mind and I wanted to share with you guys kind of how to read a chart. Definitely more of these videos coming. The more you do it, the easier it'll get. So to just sum things up, you really just want two indicators. You want an indicator that tells you about price, and you want an indicator that tells you about volume. And when you marry those two together, you stay away from false signals like these two here, and you'll be able to identify when it's time to invest right before a giant spike.